for the kind words, Jerry. It's my privilege to present Centennial Mining to you. And in some ways I have to start with almost an apology. We are producers and I will dwell and talk about our production. But more than anything else, I'll try to just highlight some of the exploration potential that we have throughout our leases. Centennial began a transformation in mid-2016 and it certainly belies our present market capitalisation. Our resource book is now just over 3 million tonnes and some 500,000 ounces of gold. We have 2 operating mines in Victoria and a production plant just south of Bendigo in central Victoria. The transformation that we've been going through has been far-reaching, shall we say. With a change in management, we've invested a great deal of capital expenditure over the last year and a half or so. We've delivered some 16,000 ounces of gold in the last 12 months, opened a second operating mine in Victoria, and been increasing our resources throughout those leases. We've had operational and organisational improvements, declared commercial production in the September quarter, and more recently we installed a secondary crusher at our Porcupine Flat processing plant in Victoria. That's increased our throughput there by some 65%, literally in the last 6 to 8 weeks. We've also recently improved our recoveries by some 2 to 3% with nitrate addition. So as you can see, revenues have substantially increased quarter on quarter by some 70%. A bit of a snapshot of the corporate overview. You can see 980 million shares listed. The major shareholders listed there, Octagonal being a private group, and I note that our largest shareholder has come over, so thank you, Ian, for being here. And indeed, thank you to many of the shareholders who have come along today. Our project locations, we have the A1 mine, which is in the central eastern portion of Victoria. It's part of the A1 gold field that was discovered in the one of the original gold mines that caused the gold rush in Victoria. Malden is across just south of Bendigo. I think it's the 3rd largest gold field by ounce production in Victoria, some 20 minutes or so drive south of Bendigo. I won't dwell on all of the transformation over the last 16 to 18 months, but a great deal has happened, as you can imagine, taking a company into commercial production, generating revenue, seeing those revenues double over the last few months has been a testament to all of those involved, and certainly augurs well for the future. Our medium and short-term goals, I should say, is to produce some 18,000 ounces of gold this financial year. To develop those production pathways, the second mine up and running now. Medium term, we're looking at increasing that production profile up to around the 25,000 ounce mark in the next financial year, and aiming to produce some $9 to $11 million of free cash, I should say. Longer term, beyond next financial years, to build out a mine life well in excess of 5 years. We have a large resource base at A1. Less so at Malden, but effectively we're looking at moving those resources into reserves to give us that long-term life. I'll start off with the A1 mine, and I have to say it's not typical to Victorian gold mines. It's not a narrow vein slate-hosted system. It is a dike bulge. That dike is rather large. It has a known depth of around 700 metres, strike extension of around 150 metres. A1 is in fact in a swarm of dikes that runs for some 30 or 40 or 50 kilometres through central and eastern Victoria. It is a well mineralised system. What we find are some quite exceptional widths and grades that we've been drilling that have supported long hole stoping at the A1 gold mine. It is, as I said, a dike and breccia associated. Discovered in the 1850s, well over 600,000 ounces mined. It's been mined for something like 145 years of the last 160 or 165 years since discovery. In more recent times, you can see that a decline has been developed from the 7 level It's come down to access the top of the mineralised dike. There is dike that extends above through to the surface being some 50 to 80 metres higher than where the portal is. And the dike certainly continues at depth down through the old workings. You can see the old workings highlighted in green. Two large shafts were put in there, the north and the south. We've been focusing on what's called the northern dike, which is this area here. Have to say, to a large extent, the southern dike, last mined in the 1920s. Little to no work has been done there in well over almost 100 years. And certainly as you move forward, we'll be moving down past these workings in the course of next financial year. And you do see an increase and a step change in the grades of those resources, primarily because the old timers haven't been there mining the narrow high grade plus ounce dirt. We've more recently identified and started to define the magenta zone. It extends below us. We have two operating stopes, one just finished, long hole stope here. The final dimensions of that, to give you an idea of scale, that's some 65 to 70 metres in strike. Got out to about 35 metres at its widest area, and we've mined a height of about 60 metres so far there in flitches as we've worked our way down. Ground's extremely competent. It is a dike, very stable, and behaves itself extremely well. The magenta zone is effectively an extension of where we're mining now. We've identified a large, broad mineralised zone, and you can see some of the intercepts that we've had there more recently. In particular, the 33 metres with a high-grade core in the middle there, and then down through the Queens, excuse me, you can see the 40 metres at just over 5 grams there. So it's quite exceptional, the grades that we do see below us. At the moment, development is progressing towards the Victory North in blue there, and we expect to be there towards the end of this quarter. Magenta Zone as a resource update is quite exceptional. When you look at some of the holes that have been there, I didn't put it up there, but one of the better holes, more mineralised holes I should say, to give you an idea of order of magnitude. One of the holes coming down on the nose of the dike was some 150 metres at 1.6 grams. It's a well mineralised area, and effectively out of that broad area we're identifying the high grade zones and mining them with long hole stopes. And clearly open at depth. So that's been the main focus of activity. More recently, we've opened up a second mine at Malden. Malden is just south of Bendigo. It's more akin to Fosterville than Bendigo. Bendigo being a saddle system. Fosterville really being, or I should say Malden really being more akin to Fosterville, which is really some 40 or 50 kilometres away from us, quite close. We completed a review of the area. And we have recommenced development of Malden. That recommenced some 5 or 6 months ago. We hit the ore there in our first strike drive on that 1060 level about 3 or 4 months ago. The first long hole stope started there about 4 weeks ago. So that's now providing quite a reasonable proportion of our feed to the mill at Malden. The great advantage that we have at Malden is in terms of trucking distance. Effectively, it's some 3 or 4 kilometres from the mill, so it's very close. Malden itself, as I alluded to, is a very well-developed goldfield. It's one of those goldfields probably not had a great deal of focus and attention in recent times, but it is a substantial goldfield. There were some 5 or 6 mines developed there from the 1860s through to the First World War, with shafts that extended in excess of 400 metres. A number of those chutes that you can see there were mined continuously for many, many years. And in terms of overall production, I think it's well in excess of 1.5 million ounces of primary gold. Added to that, of course, all of the alluvials that were found in the early days. We're mining down in this tiny little area, just here at Alliance South. We've continued the decline that was started some time ago, and as I said, the first long hole stope started there a matter of weeks ago. But it is an area that is largely overlooked. Very well endowed, a long history of mining, next to nothing done there really for the last 100 years, other than this decline and what we're doing now. And in terms of rigorous drilling, next to none. I think it's safe to say, having seen what's happened at Fosterville with the Swan Zone, areas such as these have, in our minds in particular, become far more of an exploration target than we had previously considered them. The Porcupine Flat Mill is very close. I won't dwell on it. Recently upgraded with a secondary, now putting through some 165,000 tonnes per annum annualised through that mill, up from around the 120, 130 that it was previously. We have fresh water supply, we're on grid power, main road access, and tailings dam approvals and lift underway. It is within viable cartilage distance of all of our mines. So, in terms of the company as an investment summary, to finish off, a great deal of changes over the last year and a half or so, with management changes, board changes, Chief Operating Officer appointed in Peter Crooks, John Cloud as an advisor to the board, an exceptional geologist. And we're looking to produce some 18,000 ounces of gold in this financial year. Strategy moving forward, as I said, is delivering some 25,000 ounces in next financial year. And as I said earlier, the Magenta Zone really is going to provide what we see as the future of the A1 mine at depth. And indeed, it forms almost a stepping stone towards the deeper the resources that we have on the 2022 and 23 levels. We have also completed more recently a positive economic assessment of the Nuggety mine. It's another one of the mines in the Malden area, just to the north of where we're operating, some 4 or 5 kilometres. We're going through the approvals process for that and looking to add that to our production profile in the next 6 to 9 months. So what we see moving forward with the targets that we have in hand, and particularly with a very strong gold price, if we do deliver that 25,000 ounces in financial year 2019, we'll effectively be producing the free cash equivalent to our market capitalisation. So I personally believe it's a great company, certainly invested myself, and very pleased with the progress that we've made to date. Thank you very much.